All right, in this video, I'm going to walk through the last several sessions of the Emini. This contract, the June contract, just started the other day on Friday. So I thought I'd look at Monday, and we'll just walk through the last few days leading up to today's date. And this is a great way to practice and to back test and to think through the strategy, not to look forward and cheat, but to actually respond bar after bar what's coming next, because it trains your mind on how to handle situations when you're trading live. So this session, this trade plan starts at 8:30 exchange time. It's traded out of Chicago, so 8:30 Chicago time. And there's a setup here at 8:39, and you might be thinking, well, maybe I can get in sync with it. It's 8:30. But it moves too fast. By the time you can execute on it, it's already hitting its target one. Typically, we're going to look at an 8-second response time. In other words, you need 8 seconds if you're well practiced, and you could probably do it faster, but 8 seconds is a good number. If you have 8 seconds to execute a trade, then you should count the trade and then just learn how to be able to execute by setting yourself up properly. That's training and practice. So the bottom line is this first trade went too fast. So that leaves us with this next trade here. And that comes in at 8:30. The setup's at 8:31 in 10 seconds. So you try to place that trade, and there's only 1 second has passed. It's still going really fast. But if it pulls back down, like you want to get that trade placed, and this one misses target one. And then it comes down and hits the entry right here. And so you've got almost an entire minute to place the trade. It stabs down, and that's where you get filled on this bar. That's fine. If it hasn't hit target one, you can get in sync with the trade. Once it hits target one or hits a target, hits a place where the stop is going to move, then you cancel and you don't get in sync. But it didn't. It missed by 1 tick. Stabbed down, grabbed the entry. So that's the first trade of the day. Then it comes up really quick, hits target one, and now you're going to move your stop up, lock in a tick, goes up further, hits target two, like perfectly. And that's the goal of the strategy. That's the trade plan goal. So once you hit target two, comes down, hits the trailing stop, and that trade's finished. And so literally in less than 2 minutes, you're done with that trade. And that trade made 42 points. And the Dow Emini trades at $5 a point. So that's $210 a contract. You could also trade the Micro Emini, which trades at 1/10 the size, 50 cents a point, which is a really good market to learn how to trade with, especially if you have a small account and you're patient and you want to grow it to a large account. And with the micros, you can split your positions so that in other trades, you'll be able to hit bigger targets. All right, so one and done, really quick. Now that I've kind of explained how we're going to do this, let's quickly go to the next day and walk through, see what happened. All right, so this is the next day, Tuesday the 12th. You could see the start time right here at the setup. Literally, you're a few seconds short, a few seconds shy. So you have to be ready. And at 8:30, it not only triggers in, but it gives you a chance to grab it. Maybe not. 7 seconds. Yeah, this one, maybe it went too fast. I mean, this is borderline. So if that's the case, if it's too fast, you don't have 8 seconds to grab it, you don't count it. So then you just go with the next one. That's this here. And this one is at 8:31 and 30 seconds, a short trade. Market's overbought, so you get that nice setup because you have airspace below. Triggers in, and it's pretty straightforward. You got plenty of time to take the trade. It comes down, hits target one, stop moves down, and it's going to come up. And basically, it's going to hit that stop for a break-even trade. There's one little trick you might decide to do is working around your lines. There's a little technique where if a stop ends up on one of your lines, you move it 1 tick off. So that's a possibility. Instead of locking in 1 tick, you move your stop exactly to the entry. But if you did that, you stay in the trade. If you don't do that, it's going to stop out, and maybe you're getting long here, in which case it's going to stop and reverse to short. And then that's going to come all the way down and hit all those targets for a really big winner. So maybe this isn't so straightforward. It just depends on how you trade it. These are little techniques you learn with training, and there's a little bit of a 5% art to trading. So I'm always going to point them out to you. But moving the stop one tick off the line, when the line ends up on that stop, you could adjust it one tick up. Notice how the line stopped the price and rejected it down. So that one little adjustment keeps you in the first trade. And then you're going to catch it all the way down. From here, all the way down. And if not, you might be getting long, stopping out, stopping reversing, and then you're grabbing that one all the way down. So it's an interesting example, and it has to do with, there is a 5% art to trading, and these are little techniques that make a huge difference. You don't have to learn them all immediately, but the more I point them out to you, the more you'll get accustomed to them. You'll start seeing it for yourself and work that into your own trading. Let's go to the next day. Okay, so this is Wednesday the 13th, and we have a setup right here. It's exactly at 8:30. It triggers in with plenty of time. So that one is the first trade of the day, and possible long, but the long's going to cancel. And when the price moves down and closes at the stop, notice that it stops printing because it's canceled. It's still short, hits target 1, stop moves down, starts to trail when it hits the yellow dot, hits target 2, and comes up and stops out. So again, target 2 is good for 41 points. That's $205 a contract. And yesterday's session on the 13th was one and done. All right, let's look at one more. We'll look at today's session as of this recording, Thursday, the 14th of March. All right, so we're getting ready to hit our 8:30 start time. You can see it right here, 8:30. Then there's a long trade. That's going to trigger in. There's plenty of time to, I think there is. Yeah, plenty of time to grab it. It's going to trigger in when it pulls back regardless. And that's going to end up losing. It's going to be a stop and reversal. You don't want to shy away from stop and reversals. I think they actually help most of the time. Nothing's perfect. But what I like about it is it will cut the loss. So instead of going all the way down to the stop, it gets out before the stop with a smaller loss and then gets you in to the new trade. And since these trades have pretty high odds here, we could see the action is down. Sometimes a reversal trade will put you into a reaction. There's no way to know. If it happens, it happens. But it's not necessarily bad, as you'll see. This flips over. We make a 2-tick adjustment from 89 to 87. That's a normal thing we do, which I teach in training. And that's going to trigger in. It's going to come down. It's going to hit target 2, target 3, target. Almost got to target 4, and then comes up and stops out. So if you're not positive by these two trades based on the amount of positions you're trading, you would go into another trade. If you're only trading one position to target 2, well, that one made 37 points. You have probably 35 points after you move the stop. You move the entry down to 87, so it's actually made 35 points. But it lost less because it got in at 11, got short at 87, so 24 points. So it lost 24 but made 36 or 35. So, but if you're trading multiple positions, you might still need one more trade, in which case you have a long trade right here, gets long, and that's going to stop and reverse again, but that leads to a really large trade. And so depending on how many positions you have, you're either finished with 2 trades. You may be finished with this trade if you have targets 2 and 3, because target 2 definitely, that made 35, but target 3 made 49 points. But you could see if you needed another trade, you would have had another partial loss, but then a really big winner. So today's session either ended up as a 2-trade sequence or a 4-trade sequence. Was a winning result. You quit your session with a winning result a vast majority of the time. That's the goal. That's what we're trying to achieve. And that's how you think through these trades. Stay in sequence, one after the other. Gives us something that we can create a template, a blueprint, a trade plan with rules to follow, something we could prove and get measurable results, and then we could start practicing it and get really good at running it like a business. So 4 winning sessions. Hope you enjoyed this video. I'll see you on the next one.